Namaste, and welcome to this comprehensive overview of State Bank of India's stock. In today's dynamic financial landscape, making informed investment decisions is paramount, especially when considering a titan like SBI. As India's largest public sector bank, SBI holds a unique position in the country's economic fabric. This video aims to provide you, our valued investor, with a detailed analysis of SBI's performance, potential, and pitfalls. We'll delve into its financial health, competitive advantages, inherent risks, and future outlook, equipping you with the knowledge to assess if SBI fits into your investment portfolio. Let's embark on this journey to understand SBI stock thoroughly. State Bank of India boasts a rich history, tracing its origins back to the Bank of Calcutta established in 1806, making it one of the oldest and most trusted institutions in India. Today, it stands as the largest public sector bank, not just in terms of assets, but also its expansive reach across the nation. SBI offers a full spectrum of banking and financial services, from retail and corporate banking to wealth management, insurance, and investment banking. Its vast network, including over 22,000 branches and 65,000 ATMs across India, serves millions of customers, solidifying its foundational role in the Indian financial system and its enduring legacy of trust and reliability. Let's dive into SBI's financial bedrock. The bank has demonstrated commendable growth in its core operations. For instance, its net interest income has shown consistent upward trends, driven by robust loan book growth and stable net interest margins. Profitability metrics also paint a positive picture, with the bank reporting a substantial net profit of 67,085 crore rupees in FY23, marking a significant 58.58% year-on-year increase. Crucially, asset quality has seen remarkable improvement. Gross non-performing assets, NPAs, have reduced from 10.91% in FY18 to 2.78% in FY23, and net NPAs are down to 0.67% in FY23, indicating stronger risk management and recovery efforts. These figures highlight SBI's strong operational performance and improving asset quality. SBI's competitive advantages are multifaceted. Firstly, its sheer size and government backing provide an unparalleled level of trust and stability, especially in times of economic uncertainty. This too-big-to-fail perception is a significant psychological advantage. Secondly, its vast and deep-rooted branch network, particularly in semi-urban and rural areas, gives it an unmatched reach for deposit mobilization and lending. Thirdly, SBI has aggressively embraced digital transformation, with its YONO platform now having over 6.2 crore registered users, significantly enhancing customer experience and operational efficiency. Lastly, its diverse product portfolio caters to nearly every segment, from individual savings to large corporate financing, reducing reliance on any single revenue stream. No investment is without its risks, and SBI is no exception. A primary concern remains asset quality. While NPAs have significantly improved, sustained economic shocks or sector-specific downturns could lead to fresh slippages. Secondly, the Indian banking sector is intensely competitive, with private banks and new-age fintechs constantly vying for market share, putting pressure on margins and innovation. Thirdly, being a public sector bank, SBI is often subject to government policies and social mandates, which may not always align with pure commercial objectives. Lastly, changes in interest rates, either rising or falling, can significantly impact its net interest margins, affecting profitability. Investors must carefully weigh these challenges against its strengths.
Assessing SBI's valuation is crucial for investors. Currently, SBI trades at a relatively attractive price-to-earnings ratio of around 8 to 10x and a price-to-book ratio of 1.0 to 1.2x, which are often considered reasonable for its size and sector. Looking ahead, SBI's growth prospects are tied closely to India's robust economic growth, with projected GDP growth rates often around 6 to 7%. This strong economic environment fuels credit demand, which SBI is well positioned to capitalize on. Further digital expansion, particularly through YONO, is expected to drive efficiency and customer acquisition. The bank's continued focus on improving asset quality and retail loan growth, coupled with India's infrastructure push, provides a solid foundation for future earnings expansion.
Before making any investment, it's vital to consider your personal financial goals and risk appetite. SBI, being a fundamentally strong public sector bank, might appeal to long-term investors seeking stability and dividend income, but might not be suitable for those looking for aggressive short-term growth. Diversification is always key. SBI should be part of a well-balanced portfolio, not its entirety. Expert opinions often concur that SBI offers a relatively safe bet within the banking sector, given its sovereign backing and improving fundamentals. However, they also caution about the slower decision-making processes inherent in large public sector entities. It's about aligning SBI's profile with your individual investment strategy.
In summary, State Bank of India presents a compelling case for investors seeking exposure to the robust Indian banking sector. We've explored its historical significance, impressive financial turnaround with improved asset quality and profitability, e.g. net profit 67,085 crore rupees in FY23, its unmatched competitive advantages like its extensive network, over 22,000 branches, and digital prowess, YONO platform with over 6.2 crore users, while also acknowledging the inherent risks, such as competition and regulatory influence. Its current valuation appears reasonable, and future prospects are bolstered by India's economic growth, about 6 to 7